All right, back in the action here once again. Hope you guys had a great day out there. Time to get back to work, though. We got a lot to talk about in tonight's video. It's, of course, Wednesday evening. It's September the 11th, 2019. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time today, again, my name is Joseph. My friends call me JJ, and I help traders find high-quality trade setups using a very simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job's a little bit different tonight. My job's very important this evening. My job tonight is to identify the best levels of support and resistance, the best entry and exit areas to look for setups, and most importantly, how to avoid the most common traps and avoid those losses for tomorrow. That's Thursday's trading session. And we got a lot to cover tonight in the video. We're going to grab some charts here first. We got some oil, some S&P, Nasdaq, of course. Then we've got the gold and the euro ahead of that big meeting tomorrow at the ECB. I'm going to jump in first though tonight on the black gold, the Texas T, the crude oil futures, because boy oh boy, those bears took this thing running lower here in the wake of that OPEC report here this afternoon, and they ran down into a spike and range pattern. Spike and range patterns are easy patterns to structure our trades for tomorrow. So let's not waste any time. Let's dive right into that oil chart here tonight. Let's get this party rolling here for tomorrow's trading session. Now, as you can see here, we spent most of the day today kind of grinding lower here. And then, of course, this afternoon, really the whole bottom fell out of it, right, in a strong spike as we run lower. That definitely gives the bears the control of this market. But you'll notice here with this trading range down here, it's quite obvious that sellers aren't quite certain about continuing to sell at these lower prices. So it looks to me like we found a bit of a bottom, a little bit of a baseline down here. We're definitely bearish, and now we're running into a sideways range. Now, I call this a spike in range because, of course, that strong spike down. Now, range-bound markets are balanced markets. They tell me to buy low, they tell me to sell high, and of course, we'll keep our eyes out for a possible breakout either up or down tomorrow. Now, what exactly do I want to see to sell above that high, buy above that low? We're going to talk about these specific entry setups and, most importantly, some levels to avoid trading around tomorrow here on crude oil. So nice spike and range pattern. We're going to buy low, sell high, and keep our eyes open for qualified breakouts. We're going to dive into a lot more details on that oil here tonight on the video. Over on the S&P tonight, boy oh boy, they ran that thing right up the flagpole today, didn't they? That big old pendulum swing. I'll talk more about the pendulum swing as we dig into tonight's video. But as you can see, though, on the S&P, we are clearly bullish here overall on the Emini S&P. That strong move going higher, right? That strong move going higher tells me we're going to probably see a pullback and another leg. Anytime I see a strong move in one direction, I call these a spike, right? Anytime we see a spike in one direction, we're going to usually see a second leg. And of course, I've got my eyes on some key levels of support, and I've got 2, maybe 3 different entry patterns depending on how the market pulls back that we'll talk about tonight on the video. If we don't get that pullback, there's a good chance here, because we had so much strength going higher, there's a good chance here we might get one of 3 different scenarios tomorrow as well. So I'm looking for a pullback. If we don't get that pullback, though, I've got 3 chart patterns I'm watching here for tomorrow. You definitely want to stay tuned if you're an S&P trader. And of course, over on the Nasdaq here, Nasdaq is very similar to the S&P here tonight. We're going to go into a lot more details into all of these setups, obviously, here on this video tonight. But you can see the Nasdaq, same thing as the S&P. Very strong run up. And they really end it right around that big round number. Now, they got a ways to go for that pendulum swing, don't they? Right? So the Nasdaq definitely looking like it's just getting its engines started here. But remember, anytime we see this much movement, right, in one session, anytime we see this much strength going higher here, the odds are very good we get a pullback and a retest of that high. So again, I've marked up my key levels of support down here. I've got 3 different entry patterns I'm looking for on the pullback. We'll talk about that tonight on the video. But again, with all this movement, if we don't get that pullback, I've got 3 chart patterns, right? Just happens to be 3 and 3. 3 chart patterns I'm watching for here as we maybe go sideways, keep going higher. So 3 things to keep an eye out for that Nasdaq. I definitely want to buy a pullback on the Nasdaq. I definitely want to buy a pullback on the S&P. And of course, we'll talk about if the market goes higher. We'll talk about that strategy here on the video tonight. Over on the gold, of course, is preparing for battle tomorrow. We've got the ECB announcement tomorrow, bright and early at 8 o'clock Eastern time. Well, it'll be about 7:45. We'll talk about that in just a moment here. But as you can see, though, on gold, you can easily see here on gold, the overall momentum is very bearish right now. Not a lot has changed since last night's newsletter. We know we are range bound. We're kind of bouncing around inside of this range right now. What does a range tell me? A range tells me to buy low. A range tells me to sell high. But this particular range, with this beautiful rising support trend line coming in, I've got one try for the bears. I've got two tries for the bears. I'd be lying to you if I said I wasn't keeping my eyes open for a big short covering rally back up to retest those highs. I'm going to talk about a lot more details on that and specifically how to get into that rally, because obviously with a big bear move down, just trying to buy this market is not going to be a very reliable setup. So I do have a couple different patterns. I've got two, maybe three different patterns to look for here for a reversal. That number 3 is pretty popular here apparently tonight. But three, I can think of three off the top of my head right now of three different setups I'm watching for here. Some aggressive, some much more conservative. We'll talk about the buy side on this, and then being a seller on this going to require us to thread the needle right now. I've got one very specific pattern, and you probably already know what I'm talking about tonight if you watch this video every evening. I've got that rising support trend line. I'm worried about selling into support, and with that concern, you probably know what I'm going to talk about. I'm going to talk about my favorite pattern to avoid buying into resistance, or in this case, selling into support. We'll talk about both sides of the market here tonight on the yellow metal. And then how about that euro? Euro is, boy oh boy, nice and bearish, as you can see here. Obviously, something spooked that euro right early in the pre-market here this morning. Big, strong run up, but then look at how they bounce off of that moving average. Now, this is not quite a bull market yet. You know what I'm looking for, right? You got to get that 1, 2, 3 reversal. But I'll tell you right now, though, I'm certainly looking for a very specific scenario here right now to be buying off that buy zone. I've got my hidden channel. I've got my round number underneath me. So I really like the idea of being a buyer on this, but I need to see a little bit more proof. Now, I will also talk about what we're looking for to be a seller on this as well, because we could easily find ourselves right back down to retesting that low tomorrow as well. So we're definitely overall bearish on the euro right now, but I'll tell you, that pop off the low is very, very convincing. That leads me to believe now we've got one try, two try, and I'm going to make you wait for the full breakdown here tonight in this newsletter. So we get a lot to cover here tonight. We'll talk about the buy side here on the euro. We'll talk about the sell side on that euro. Gold's all ready to go. Nasdaq and S&P running hot here. Oil got clobbered here today. We're going to break all of these down into small bite-sized pieces. But before we do that, though, I just want to remind you guys to make sure you join our mailing list. You know, you may not be aware of this, but right before I publish this video on our YouTube channel every evening, I send out an email to everybody on our mailing list. That way you know right when that nightly newsletter goes live. I want to send you that email every evening so you never miss another great video. And it's very, very simple to get on the mailing list. All I need is your name, your email address, and then hit that subscribe now button, and that will add you over to our mailing list. Now, just a heads up on this, when you subscribe to our list, I'm going to send you a welcome email with a verification link. I need you to check your email. Your job is not done until you hit that subscribe and then check your inbox and verify that you got the email by following that link inside the welcome email. Not to mention the welcome email has a bunch of great free resources for you so you and I can get the most out of our time together every evening on this newsletter. And then how about questions? Do you have any questions for me here tonight? If you have any questions about anything we talk about tonight on the video, the patterns, the strategies, the brokers, any questions you have at all, please don't forget, you can always type those questions in down in the comment section below. And while you're down there, by the way, typing those questions in, hit that thumbs up button for me. You know, guys, every time you hit that thumbs up button on YouTube, YouTube rewards me by explaining exposing this video to more traders just like you. So help me expose this video to more people that love this strategy as well. Hit that thumbs up button. Post a comment in the comment section below if you have any questions about anything we talk about tonight in the video. And don't forget, if the comment section isn't quite your bag, that's all right. Call that toll-free phone number. I'm always here. You're more than welcome to call that toll-free phone number. I'm always here in the office to pick up the phone, answer all your questions. Maybe you've got questions about getting access to our free trading classes or our free pass to our trade room. Call that toll-free phone number in the upper right-hand corner or use that live support tool. I'll make sure to restart that live support server for you when we're done. And I'm always here standing by to help you guys out. So don't forget, drop those questions in the comment section below. Hit that thumbs up button. I really appreciate that. And make sure you join our mailing list. In the meantime, though, let's get to work here tonight, shall we? Introduction is out of the way. September 11th is almost out of the way. And, of course, tomorrow, of course, is Thursday, September the 12th. Tomorrow, of course, being a Thursday session in our trade room. We open up our trade room every morning at 8 o'clock Eastern time, and we trade the strategy together. And we got some big news tomorrow morning, as you can see here. Now, on the schedule, you can see the CPI and the jobless claims. What's not on the schedule, though, is that ECB announcement, right? Tomorrow, of course, is that ECB announcement tomorrow morning. It'll be around 7:45, and then the press conference usually starts around 8 o'clock Eastern time. And so you've got to be thinking euro, you've got to be thinking gold tomorrow morning. Those are two markets that will certainly be affected by tomorrow morning's ECB announcement. And the rumors have it that they're talking about going into negative interest rates tomorrow at that meeting. Yeah, negative interest rates, right? I won't ask you how the physics work on that, right? I won't ask you how they balance the checkbook with that stuff, but I will tell you they're talking about that tomorrow, and it's likely going to have some big implications on the markets that we trade most, especially euro, especially gold for tomorrow morning. Now, again, just keep in mind on this, anytime we have the ECB announcement, the most important thing is be careful on the euro and the gold before the announcement. Now, hopefully I'm wrong about this. I'm wrong all the time, right? In fact, as a trader, you've got to be okay with being wrong. Hopefully I'm wrong about this, but hopefully there's a great bit of price action overnight. Hopefully there's a lot of great price action you guys can trade overnight. But typically, before the ECB announcement comes out, gold and euro are real choppy and real sloppy. So be careful here overnight. If it's not moving very much overnight, don't force it. You know what they're waiting on tomorrow morning. 7:40 the announcement comes out. 8 o'clock Eastern time, right, will typically be when Draghi begins the press conference. And usually that press conference will have these markets jostling back and forth, usually upwards to 9:15 and even 9:30 Eastern time tomorrow morning. So, tomorrow morning is one of those mornings where you really got to look at the water and say, okay, the water might be too choppy tomorrow on the gold and euro. And this is really where trading with us tomorrow morning in the trade room is going to be a big advantage. If you don't know what dangerous markets look like, that's going to be your first clue tomorrow to really be careful tomorrow. Trade on your sim account. Not a day tomorrow to go from sim to live on gold and euro. I'll tell you that much right now. So be careful. And again, think of yourself like a captain of a boat, right? You get to the dock in the morning. You look at the water. If the water's all choppy, it's all bright, big chop everywhere. Stay out of the water, right? And live to trade another day. Again, tomorrow morning we'll be navigating those choppy markets tomorrow around that news events tomorrow morning in our trade room. So come out and join us, and we'll make sure we do it the safe way and the reliable way tomorrow morning. Now, as if we didn't have enough affecting euro and gold because of that ECB announcement, we've also got CPI tomorrow morning too. Now, CPI, the Consumer Price Index, anytime you see a CPI or a PPI, you know you're thinking inflation. Inflation means dollar. Dollar means gold, right? Dollar means euro. So we definitely have to be aware of that CPI number, right, tomorrow morning at 8:30 Eastern time. So we got a bunch of news coming out tomorrow before 9 a.m. Eastern time. So get to your desk early. We, of course, will be in our trade room bright and early at 8 o'clock Eastern time tomorrow morning to make sure we have a front row seat to do it the right way together with all of our clients in the trade room. In the meantime, though, let's get some charts going here, shall we? Let's get some charts up here right now. So now we know the plan here for tomorrow. Careful on that ECB around gold and euro. But let's talk about some oil, some black gold, some Texas tea. The most important thing we know on this chart right now is, one, that strong bear move down, and two is a trading range. The bears have control. into a trading range. Now, the simplest way to do this is whenever we have the bears in control, I'm looking to sell up above the high of a range. Okay, range-bound markets are balanced markets. What goes up almost always comes back down. Now, there will be certain times where we get a successful breakout, or in this case, a reversal as well, possibly. And so we want to keep our eyes open for that, but we need to see proof of that before we can try buying this. We definitely don't want to buy this market unless we see some proof on that. Now, as far as being a buyer on this goes underneath, because we're trying to go against the overall trend, I need to use a slightly more conservative pattern if we're going to be a buyer coming off of that low. So let's talk first about what it means to be a seller right now, right? What would sell side setups, right? Sell side patterns, what would they look like right now? Well, again, we've got our range. And so what I'll do is I'm going to mark up my sell zones overhead, right? I use the size of that range. That marks up my sell zones overhead. It also marks up my buy zones down below too. And you'll learn all about drawing ranges in our classroom sessions here at School of Trade. The bottom line, though, is once I have my range, I know where my levels of resistance are. I'm also drawing in this channel, you'll notice here, off of these lows, right? I've kind of lined up these lows and brought that up at these highs, and that's kind of creating this, right, this little hidden channel up here. I'm not sure that hidden channel is going to be that important for tomorrow. What I'm really trying to do is just get up above this range so I can sell it back down again. Most important thing is I want to stay out of the range. I want to get up so I can sell it back down, get it down so I can buy it back up. So knowing that information, how do we sell this market right now? There's really a couple different options that I'm looking for here, and you can basically plan this based on the type of pullback that we're going to get. For example, I've got that trend line up here, right? So let's say we go back to the trend line. Moving average comes over, and what's going to happen is the buyers are going to try to buy that pullback most likely. Okay, buyers try to buy the pullback. I'm up inside my sell zone, and now at this point I can be a seller right into the failure, right, in the stop losses of those buyers. So again, imagine now we run up into the first sell zone. We then pull back off of that high. The moving average now is coming over. The buyers are thinking easy money, right? Short, cover, and rally. The buyers are on the wrong side of the market, though. The buyers are not in control of this market. So when I see those buyers sort of buy that pullback now, again, knowing it's a range, knowing that ranges are what? Their balance areas. What goes up will probably come right back down. I know exactly where their stops are now, and I'm using those stops as fuel to sell right back down into that trading range. We call this a failure pattern. Now, what if we get a bigger jump? What if it really jumps up here now? If we really jump, is that a bull market yet? No, not yet. We'll talk about what a bull market looks like in just a moment. But now if we get a real strong jump, right? Just like they had a big strong run down, right? Maybe they get a big strong run up. Now, can I still sell that? Well, here's the problem. When we have a big, strong run in one direction, the odds now shift to retest that high. So I don't want to sell it too aggressively. I want to be a little more patient with this now and let them try once, let them try twice. Once I see those buyers trying once and trying twice, now I can sell it back down again. This is a slight variation of that failure pattern. It's called a nested failure pattern. Both of them, of course, use failures, but one of them has a bigger pullback, right? First one is a relatively shallow pullback. It's a failure back down. And again, buyers buy off the moving average. We're selling into their failure. Second one's much more dramatic, right? It really jumps up off of that range. Buyers now have more of an edge. We let them try once, let them try twice. Now we know where they're paying, right? Now we know where the sellers, now we know where the buyers, now we know where they start feeling pain, right? Once it starts going against them twice now, most buyers are going to pull the plug. They're going to get out. And that, right, and that exit for the buyers only throws gasoline on the fire for the sellers running this market right back down in. So those are two patterns to look for the sell side as we go higher. Now, if we still go sideways here, not a lot changes. So it's pretty much the same plan, right? We go up, let the buyers sort of buy it, sell into their failure, back down into that range. Or jump back up. Big jump, right? One try, two try, nested failure. Again, back down into that trading range. Now, what if we go lower here? What if we go lower? At what point Can we sell as the market's going lower? Good question. Because it's a balanced market, right? It's a range-bound market. I don't want to sell as it goes lower, right? Trust me, if the sellers wanted more, they would have kept it going lower, right? That's what a range tells you. A range tells you the sellers are going, no, way too low. We're not selling down here. We got to get some more news. We've got to get something that changes their opinion of value before they're going to sell. So now, how do we sell as price goes lower? I'm going to wait for a strong move down. I'm going to wait for a pullback to the moving average, and then I need to see proof. I got to see a strong move off the moving average. Now, I know. Why not sell that first pullback? Well, because I'm going to show you in a second how I'm going to buy that first pullback. Okay, so on the sell side, though, remember, balanced market in that range, strong move down. Now, show me proof. Show me proof that you can actually hold that pullback. Okay, show me you mean it. Now, once we get that proof, I call this a 1, 2, 3 breakout. Once we see that 1, 2, 3 breakout, now we know the bears want more. I can mark up that low, draw the trend line to mark up that low, create the channel off that high, and now that creates that hidden channel, and we're selling off the top of that hidden channel. Does that make sense? Okay, so again, you got to wait patiently for more confirmation. Because if you try to sell too quickly with that lower low, you'll end up getting caught and it'll swing back up into that range. Speaking of which, right, how do you buy this market right now? Maybe you're laughing at me right now saying, no way, Joe, we're long tomorrow, right? What do you buy this with? Well, first of all, as we go lower, this is the preferred buy for tomorrow. With all that momentum going lower right now, we know the market's bearish, so being a buyer going to be a little bit tricky here. I'm looking for a very specific reversal pattern called a crown reversal. Strong move down, moving average will come over. Sellers will try to sell off of that moving average. That's going to be one try for the sellers. Now, those sellers are probably not going to give up after this one try. They're going to probably wait for a little trap high up here, and they'll try it again. Now, once I get those sellers trying twice, now I know I've got a chance to rope in those bears and literally use their momentum against themselves. I'm looking for a trap low now for a buy going back up into that range. I call this a crown reversal pattern. And when you're trying to go against a trend like this, you really got to make sure, one, you're doing it at a level of support, like that buy zone below the range. Two, you got to be patient to wait for that strong move down. Let those sellers try once. They're probably not going to give up after one try. They'll probably try it again. And if we can get that second try, then we can look for that launch going back up into that trading range. Again, it's called a crown reversal pattern. My favorite reversal pattern there to buy, especially below those ranges. But what if I'm wrong? What if we run back higher here? At what point could I buy this market going higher? Same idea as going lower. One, strong move up. Two, pull back to the moving average. Three, strong move off the moving average. Now the key here is getting that jump off the moving average. That's the key. Once you have that jump off the moving average, now you know the bears have lost it. The bulls have grabbed control. We're going to mark up that high. We're going to mark up that high, find that trend line, and then define that range, find that channel. Now we know where our sweet spot is, and we're looking to buy off the low of that channel. This is called a 1, 2, 3 reversal into a hidden channel pullback. Target, as you might imagine, is all the way back up to retest those highs, right? Targets are back up into that high, 58, 58.5 there, around those highs there. Probably not going to happen tomorrow all the way back to the highs, but I mean, come on, right? This is oil. Anything is possible here for tomorrow. So now we know, buy low, sell high, avoid the middle, fade those breakouts, right? Unless you get what? Unless you get the 1, 2, 3 breakout. Now, I'm going to move forward now to the S&P 500. Before we do that, though, I know if you're here for the first time right now, you're probably getting blown away by all these new terminology. I want to give you a deeper dive into the entire trading strategy here. What I'll do is I'll put a link up top here in the upper right-hand corner. Grab that link. I'll also put a big red button for you below the video tonight on our trading blog, and that will give you access to our free trading class. Now, as part of the free class, you'll learn all the terminology, obviously. You'll learn all my favorite entry setups, my 4 favorite entry setups, And the same strategy that we use every morning in our trade room, I call it the 3-step strategy. So don't delay. If you're here for the first time, or maybe you're not here for the first time, but you haven't taken the free class yet, grab that free course. It's linked up in the upper right-hand corner. And don't forget, when you register for the free course, I'm going to shoot you an email to give you access to the members section of the website, and I need you to check your email. So make sure you use the right email address, check your spam folder, and if you have any problems, just call me here in the office, and I'll be there to help you guys out. S&P up next here. S&P up next. S&P, of course, is clearly a bull market right now. Now, I do want to give you a heads up. It's about that time of the month again. We are looking at rollover here right now. I think they're telling us right now on the indicator is ready for tomorrow. I don't think we're going to have rollover tomorrow, but keep in mind, this is the 919 contract right now on the S&P futures. We'll be rolling over to the 1219 contract once the 1219 contract has more total volume than the 919. So tomorrow, right on the newsletter, we'll start watching that rollover. Right now, 919 will have a lot more volume total than the 1219. We'll move over to the 1219 once that volume is higher on the 1219. So keep your eyes on that, right? Next couple of days, probably Thursday, Friday, we'll see that rollover start to kick into gear here. And obviously, right, I'll make sure you got you covered here on the newsletter when you tune in every evening to watch. So rollover is on our mind. Bullish momentum is on our mind. But the big thing I can't get over here right now is just how strong, right, that move was. Now, whenever I see a strong move like this, I always think of 3 different chart patterns. 1, a spike in range, just like we saw on oil. 2, a spike in channel, right? Spike in channels are very, very common and great patterns. And 3, the hardest one out of them all, is a spike into flag. Flag patterns are a little bit tricky. The bottom line is these are the 3 different chart patterns that I'm looking for or anticipating here tomorrow. If I have a trading range, because it's a bull bias to it, I'm looking to buy underneath the range. If we have a spike in channel, because again, it's a bull bias, I want to buy the range from the base of the channel to the first pullback in that channel. Looking to buy, right, that deep pullback into the buy zone. If we have a flag pattern, flag patterns are a little bit tricky. You want to go up, get the pullback, and go off the top, right? You don't want to chase after those flags. So those are 3 different chart patterns, and what do they all have in common? They all start with that strong, what do we call them? A spike, right? Spikes are strong moves that don't pull back all the way to the moving average, right? So 3 different chart patterns. We're bullish. We know what we know we're looking for one of them most likely. We don't know exactly what they're going to be yet. The bottom line though is if we get really lucky, we'll get a nice strong pullback here right overnight. Hopefully we do. I'm not anticipating it just because the news headlines recently, everything kind of points very bullish right now for the S&P 500. With all that momentum, we just may not get people taking profit, and we may not get that pullback here. And again, we'll be ready for those 3 scenarios tomorrow as well. But let's say we do get lucky, right? We know we're bullish. I want to find a level of support, right, to buy off of. I'm going to mark up these highs. Mark up those lows. That obviously is a key area of support. What I really like though is the pullback at 90 and that reversal line there at 87. This, if I had my way tomorrow, this is exactly where I'd be buying right on that pullback. Now, talking about the pullback, if we do get that deep of a pullback though, this is going to feel like a very bear market, isn't it? Right? If we pull back in the next couple hours, this is going to feel very bearish, isn't it? That moving average will come over now. And with that moving average coming over now, I'm going to simply look for the sellers now to try and sell the pullback, right? Sellers will most likely try to sell off that moving average. Again, if we see a strong move down, that moving average will come over. The bears will likely try to sell off of that moving average, trying to make a run lower for whatever reason. And at that point now, we know exactly where their stops are, right? We know exactly where their pain point is. That's the key. Because the minute those sellers realize they're stuck on the wrong side, they're not going to take their time. They're going to get the hell out of that position, right? Because they're going to realize, shoot, they did it to me again. And think of it this way, right? The pattern you're looking for is a lot like this one back here, right? We go below the moving average. We sell off the moving average, right? You can see that little dip off the moving average. That creates that stop run, and the market will shoot higher, right? Same idea. Pull back. As we pull back, trend line or moving average comes over. It's a failure pattern off that low. Now, that failure pattern oftentimes pulls right back for you. So keep that stop, right? Keep that stop trailing. Don't get too aggressive with it. It will almost always pull back there for you after you get that failure. The key is going to be to get that pullback pattern, that failure pattern, and that pullback pattern. The key will be to get into it before it gets more than halfway, right, back up the ladder again. Okay, that's always my secret, right? You want to make sure, kind of mark up that halfway point and think, all right, get me in underneath that halfway point. Because mentally now, that puts my risk-reward ratio good, right? If I know my halfway point, I now know my risk and reward ratios are balanced at the very least. So a good rule of thumb there, look for that pullback setup before you get above, right, that halfway point. And if you do get above the halfway point, think of a trap pattern instead, right? Trap low to get in without having to buy too high on that one. We'll talk more about that tomorrow in the trade room. Now, another thing to consider is as we pull back, right, a potential two-legged pullback. Watch a two-legged pullback. One leg, two leg, draw that trend line over, and then from here, it's up and over and in. Now remember, for a two-legged pullback, you always want to have some daylight in between the candlesticks and that trend line. Okay, that's always a very, very important part of this. Okay, you don't want to, in other words, you don't want to trade this one. You don't want to see it grind. Right? A grinder is very difficult to know which time to pull the trigger. So what you want is you want the up and over and then bouncing off of it, right? It's going to go up. It'll look like it's going to keep running. It'll slam lower, and you'll see buyers just jump all over that trend line. That's called a two-legged pullback pattern, right? Or a 2LP, as we call it in our trade room, right? So, of course, those are two different setups I'm watching for here for tomorrow if we get that pullback, right? Now, talking about those three different patterns. Okay, one is a trading range. Okay, looking at that range right now. Let's say we start going sideways up here inside of a range. What do we do with a bullish market into a range? We buy low. How do we do that? With a two-try failure. We let the market pull back. We let the sellers try to sell the breakout pullback. Rookies love pullbacks. Rookies love breakouts and rookies love breakout pullbacks. I know because I lost a lot of money myself trying to figure out how to make those work when I was a rookie. Okay, so I'm not going to trade the breakout lower. No way. We're bullish right now. I'm also not going to take that pullback because, again, we're bullish. So what I'll do is I'll skip the breakout going lower, let the sellers try to sell the breakout pullback, and once I see those bears are in, now I know where their pain is. Now I know where things get ugly for them, and I'll just nudge them right into those stops. You'd be amazing how effective that is when you've got such a strong trend. Now, that's the spike into a range. Another pattern very common is a channel. Okay, now this is, hopefully we get a channel here. Hopefully, spiking channels are great patterns. So if we come out and we start seeing that spike in channel, right? It's a spike up into a channel. Now what you want to do is mark up that the first pullback, the base of that channel now, and you're looking for that pullback to buy off that low. Now that pullback coming off that low oftentimes ends up being that failure into pullback combination, right? It's a seller pullback, right? The bears try to sell off the moving average. They fail. That's, of course, the failure pattern, then into the pullback, and we're up again, making sure we know where's our target, back up to retest that high. The last one's going to be a little more tricky. This one's very, let's put it this way. You're going to know it when you see it because a flag patterns are very slow. In fact, they're so slow, they'll drive you nuts while they're setting up. I'm not joking, right? The key is you know it's a flag when it's really slow. Trust me, if the market reverses, it's going to go, dump, right? It's going to collapse. Okay, when the market reverses, it's going to collapse, right? There won't be any question about whether or not the bears have it. When the bulls have it, it's slow and methodical as it pulls back. Now, the tricky part to this is there are really two ways to buy a bull flag. One is underneath it with a breakout pullback failure. These are relatively tricky. Not to mention they're difficult for new traders because it usually feels like it's a reversal. So that's definitely the more advanced setup on this. What happens is the market will try to go underneath the channel. The sellers now will try to use the underbelly of that channel, sell off that channel. And of course, this is a bull market right now. It's not a bear market. It's a bear channel, but the personality of it says we are bullish still. Remember, slow on the pullback, right? That's the giveaway, and that leads to that jump right back up. So don't be foolish trying to sell underneath that low until you see the complete collapse there, right? And again, I know we all want to try to call reversals, but reversals are very difficult to predict. So we try to stay away from predicting reversals, and we wait for that 1, 2, 3 reversal instead. Okay, now, the much easier one, right? The much easier one now is, it's still a little bit more complicated. What you want to do is you want to mark up that high right here, wait for a trap above that high. The bears now are going to come in, right? Sellers will come in, and sellers will try to sell off that trap high. That's great, because now you know you've got them right where you want them. Let the sellers try to sell that trap high. Then what you'll do is, strong signal candle, right? Buying right into their stops. Now, I love that pattern. That pattern, in my experience, usually happens very fast, right? It'll happen fast. It'll jump up. It'll feel like you're going to miss it. The bears will come in. They'll try to sell it back down, and we'll look for the buy right off the top of that channel. Does that make sense? All right, guys? So those are 3 different scenarios here for tomorrow. Now, the one thing we haven't talked about here is, right, if the market goes higher or lower. If it keeps going higher, we've got that measured move right overhead, right? So that measured move means be careful. That's major resistance. Okay, so as we go higher here, we're really running out of space up here. It's going to be difficult to make money consistently, reliable as we go higher here. As the market goes lower, what's a bear market look like? Strong move down, pull back to the moving average. Yep. 1, 2, 3. 1, 2, 3. Now, I know it's not fun to have to wait for it, but remember, if you try to sell that pullback, you're walking into a firestorm here. A lot of buyers are going to be trying to buy that pullback. It's going to be very difficult to make money doing that consistently. That one might work, but on average, you take those trades all the time, you're going to lose money. Now, once we have that 1, 2, 3 reversal, we'll mark up that low, mark up that low, find that channel now, and now we have that hidden channel. It's a 1, 2, 3 reversal into a hidden channel pullback. Target now at that point is going to be all the way back down to retest that low from today, right down around that 29.72 and change, right? Down around that low from today, right? 29.72, that target for the bears here tomorrow. So the S&P is looking pretty good. I got 3 different patterns you're watching for. And again, like I mentioned earlier, if you want a much deeper dive into all of these pattern setups, grab that free course. It's in the upper right-hand corner here on YouTube. I'll also put a big red button for you guys on the blog here tonight that we can get it there as well. Over on the Nasdaq tonight. Nasdaq's in a very similar situation here to that S&P, right? Nasdaq in a very similar situation. We know we're bullish. Very, very strong run higher here. Ideally, on the Nasdaq right now, I want to get that pullback. I want to buy that pullback. We may see that trading range going sideways up here. We may see that spike in channel. We may see that flag pattern as well. So without taking up too much time, the Nasdaq is very similar here to the S&P. A couple scenarios you're thinking about right now, right, is you want to make sure you've got this. Let's just zoom in on that a little bit closer there for you, so you can see the bigger picture on that. All right, so again, the first one would be we see that nice, easy pullback down to the low of this channel. Right, we know we're bullish, we know we're bullish. I should have mentioned this earlier. Right, we know we're bullish, so of course I want to be a buyer at support. I've got my trend line going up. The midline fits nicely right in the middle, and I've got that little hidden channel low down there. Right, so again, I want to be a buyer. I want to buy at support. Okay, that's the key. I want to buy low. I want to buy at support. And in my opinion, the best time to buy is right after the market goes below the moving average. In a strong trend like this, every time the market pulls back below that moving average, there's an opportunity. Now, I know that goes against conventional wisdom, right? Because, I mean, how many trading books did I read as a rookie that told me when we're above the moving average you're buying, when you're below the moving average you're selling, right? That is very bad advice. I'll tell you right now. If we have a very strong trend like this and you're trying to sell every time we go below that moving average, you're selling right into the buyer's sweet spot because it gives them a nice low price to buy at. So with this momentum, I want to buy low. Again, think about getting underneath the moving average so you can trap in some of those counter trend sellers, use their stop losses as fuel to run right back and retest the high. Let that momentum to work for you. Okay, so I got the level support there. I've also marked up this level right there at 62.5, and I love that reversal line at 47.5. So these areas right here are great levels of support here. And again, like I mentioned on the S&P, hopefully we get that pullback. Right? Hopefully we do. So first of all, what if we do get that pullback? If we do get that pullback right now, I got my support level down here. I'm looking for that moving average coming up. I want to see sellers try to sell off the moving average, right? Bears come in, the bears commit off the moving average. Now we know where their stops are and we can buy right into those stop losses. Now don't forget, right, that oftentimes will pull right back for you and give you another layup of a buy setup, which is that what I call the failure into pullback combination, right? The failure into pullback combination setup. It's a great pattern setup. I love trading that pattern in our trade room. So will you as well, right? So try failure off the moving average into a bull pullback. And again, as I kind of mentioned earlier, right, if you think about it, measure the size of this range. Where's my halfway point? And a good rule of thumb is making sure you're getting those entries below that halfway point. And if you can't, stay away and look for a trap pattern, right? Look for a trap pattern instead. We'll talk about that here tomorrow morning in the trade room. So that's the idea behind the pullback here. Again, keep an eye out for the 1, 2, 3, right? That two-legged pullback, 1 and 2. Now, again, we want to go up and over. Remember, you want to get some daylight in between those two, right? That's the key. You don't want to trade the grinder. The grinder will not be a good idea there. You want to trade with the daylight there. Buy that two-legged pullback there. Okay, those are two patterns I'm watching for as we get that pullback. Now, what if we go sideways up here? Very similar, obviously, to the S&P, right? We're right around the big round number. The big round number doesn't worry me so much. What worries me is how far we went today. And usually when the market goes this far in one session, it will usually end up going sideways or give you a spike in channel or a spike in flag pattern here. So again, once I have my trading range, once I start seeing us go sideways, that moving average will flatten out, right? Now what I'll do is look to buy underneath that range. And to do that, I always wait for some profit taking. That will give us a pullback. Right? That pullback now, right? Pull back. Now the moving average comes lower. The sellers now start saying, see, I told you, we're going back to the lows now. The sellers now try to sell that breakout pullback. Again, rookies eat breakouts and breakout pullbacks for breakfast, lunch, and dinner each day. I know that because I'm a victim of trading breakouts and breakout pullbacks as well. It's not a bear market. It's not even a trending market at that point. It's a range, and ranges, of course, are big price magnets. I want to trade that failure. And of course, the trick here is making sure you're buying underneath the range, right? That's always a trick. The secret to success in a range environment is getting in outside the range. I don't care what your excuse is. If you're trading inside the range, you're putting yourself in an easy position to get a stop and run. That means you'll get stopped out just to see the market stop you out and run right where you had your target. So make sure you're buying underneath that range. Or again, if we do see that spike in channel, let's just say, for example, we do get that spike in channel. As the market channels higher, mark up that first pullback, the base of that channel. And again, you're looking for that pullback pattern now into the base of that channel. And that pullback usually turns into that failure into pullback combination, right? Just kind of keep it in mind, right? That pullback will oftentimes turn into that failure pattern into pullback, right, combination there. All right, so that's the second one there. And then obviously that failure or that flag, again, very, very similar here. Flag patterns are classified by the sluggishness of the pullback, right? Very, very slow. It's a breakout pullback failure below that low. Okay, again, that's a little bit tricky for new traders, right? So the more conservative one is where we go up. Remember, what you want to do is you want to go up, trap high, right? Go up, trap high. Get those sellers to try to sell off that trap up there, and then buying into their failure, right? Buying into those stop losses for that run up to that next measured move. Which reminds me too, right? If we do go higher, we're running right into some major levels of resistance. So if we do keep going higher, keep waiting for that pullback into failure. Again, every time we go below the moving average in a strong bull trend like this is a buying opportunity. All we do is look for the sellers to commit. Depending on how far the pullback goes, is it a one try, two try, or is it a nested failure, which we talked about earlier on the oil. Last but not least, again, 1, 2, 3, 1, 2, 3 reversal. Moving average comes over. Sellers jump off the moving average. Okay, it's not enough to just get a strong move down. It's not enough to just get a strong move down. Strong move down means bears try and failure back up. Right? Strong move down means bears try and failure back up. Okay, so don't try to sell a strong move down. Wait for that pullback. Wait for that jump off the moving average. That's your green light to be a seller. Mark the low, draw the trend line, find the channel, and then of course we're selling off the top of that channel. Where's my target? Just like we talked about on the S&P, it's back down to retest the low at that 7790, 7800 big round number makes a very easy objective for us. Looking good there on the Nasdaq. How about some gold here tonight? Now again, as I mentioned earlier, gold and euro are walking into a you-know-what storm tomorrow morning at the ECB announcement. Announcement comes out at 7:45, but the press conference is really where things get most difficult in my experience. Now, I'm definitely not one of those traders who says I do not trade during these days, right? I don't, it kind of sounds funny to say, right? I'll never say never. I always say whatever, right? But be very careful falling into that lazy mindset. When I was a rookie trader, I read all kinds of books and I attended all kinds of seminars, and I heard all kinds of traders that would say, oh, I won't trade Monday. Oh, well, I won't trade Friday. Okay, well, when do you trade then? Like, when exactly do you trade, right? I don't trade Mondays, don't trade Fridays, right? So just be very hesitant to ever take anybody's word that says, I never do this, I never do that, because I'll tell you right now, we never want to say never. And I know that's kind of an oxymoron, right? But there's always going to be a couple reliable setups each session. We may have to wait longer for them than we want to. And that's where things get tough for tomorrow's session for gold and euro. You may have to wait until 9:45, 10 o'clock tomorrow before the dust settles to really get some good setups. So whether it takes duct tape, a shock collar, some handcuffs, right? Or maybe just a trading friend, or be with me tomorrow morning in the trade room, let me hold you accountable. It's very important that if you don't see good setups, you sit on hands and wait, right? As a trader, think of yourself like a lion stalking its prey. If you jump too fast, you're going to spook that prey and you're not going to eat that day. It's very important that we wait and wait and wait, and especially with that news coming out tomorrow morning. Okay, long story short, the hardest part of tomorrow is going to be staying patient and waiting for your setup. Again, handcuffs, duct tape, whatever it takes. Leave the room if you need to, so you're not tempted to overtrade. And again, this is why our clients do so well in our trade room, because I'm going to hold you accountable to your rules. I'm going to make sure that you're not taking those setups just because you're itching to take that next trade. Now, what do we know right now? There's a lot we know about this market. First of all, we know we are bearish. Right? That is for sure. We know we're bearish overall. And because we're bearish, we definitely want to be a seller, right? That'll be the more reliable trade here, is to sell where? Sell at resistance. What else do we know? We also know we have a range, right? Market rolling around back and forth here inside that range. What does a range tell me to do? A range tells me to buy low, and it tells me to sell high, right? This is a relatively wide trading range. So as you can see, I'm using a modified sell zone and a modified buy zone. You'll learn more of those tricks inside of our trading classes here at School of Trade. Knowing that I want to buy low and sell high, we have a bear bias to it. So clearly, I can be a lot more aggressive in these environments selling high than I can buying low. What else do we know? We also know we have a trend line coming up. And that trend line, I always joke around by saying in a range-bound market like this, with a rising support trend line, it might as well be bear repellent, right? You know the bear spray you bring when you go camping? Okay, right? Keeps the bears away. That rising support trend line, that's bear repellent right there, right? That's going to keep a lot of sellers from committing. So if we're going to be a seller on this market right now, it's not going to be easy. Let's put it that way, right? It's not going to be easy unless we can get through that trend line, or we have to use a specific type of pattern, which is called a trap pattern, right? Trap patterns are really going to be the only way you can sell this market right now because you got that trend line coming up. Okay, let's talk about the sell side here, how to be a seller on both sides of this. Okay, so we know we want to be a seller. I know I've got that rising support trend line coming in. Here's what I'm looking for right now. I'd like to see a run up, finish off this move back to retest the high. One thing about ranges is that if you mark the extreme high and mark the extreme low, these will usually be where you get the best kind of responses, right? It's almost as if there's an electric fence around that trading range, right? And it goes up and shocks them back down, right? It goes down and shocks them back up. So whenever there's a range, I always try to think, okay, where's the widest part? Not the widest part of the range, but as we bounce around back and forth on this right now, where's the highest highs? Where's the lowest lows? So that's the first thing. I want to get us up, right into that high, right into that highest point there. And then we need to see that crown reversal pattern. Now, this won't be a crown reversal pattern, but it will be is a way of avoiding that trend line. I want to see buyers try once in the pullback, try twice on the pullback, and this is really going to be the only way that we'll safely be able to sell this market unless we get underneath that trend line. Okay? So as we go higher here, buyers, let them try once in the pullback. Buyers, let them try twice in the pullback. Sellers are coming in and selling that trap high. Because again, the trap pattern, right? That trap pattern is going to be the only way I can justify selling into a rising support trend line. Now, if we get lucky, we may get lucky on this. We may get, let's bring these over here real quick so you know what, we got those ready to go there, right? We may get, I'm definitely a bit OCD when it comes to my charts, I'm sure you can tell. Now, we may get a market run right back down, right? And this thing may just jumble up here. We may break this trend line right apart. Right? So if they break that trend line down, right? If it just runs back in and kind of bounces around a little bit, perfect. Now that trend line is busted. Now it's not even an issue anymore. Now we can sell above the top of that range. Remember, it's a range. So I want to use that 1, that 2, and that failure, right? 2 try failure pattern. You can see an example of that back here, right? We go up, the buyers buy the pullback off the moving average, and we're selling back into it. In fact, you can see here that is actually a failure into a pullback combination. Now that pullback's not an easy one to take because right inside the range there. But hopefully you can see, right? We go up, the buyers try to buy the pullback, we sell into their stops, and if we have enough room on it, right, moving average comes over, we can sell the pullback from there too, right? That's that failure into pullback combination. Okay, good example right there. Failure into pullback combination from earlier on in the week. Now, whether or not we'll set tomorrow, that is, of course, left to be determined. So again, it's going to be an up, trap high, 1 try, 2 try, trap, and go for that sell. Now, what if we run lower here, right? What if we run lower? I doubt we're going to run lower tomorrow on gold just because we're here in the ECB talking about negative interest rates. And something tells me that's not going to be good for the price of gold, right? So what we're going to do is, if we do get a run lower here, we want to buy off of that low. We'll talk about that plan in a second here. What's a breakout look like? Strong move down, pull back to the moving average, yep, and then strong move through. Got to be a very, very strong move down because if you recall from last night's newsletter, 1488.9 is a major, major low. So we got a major low down there. So if you want to even think about selling low, 1, 2, 3 breakout, really show me you mean it. It's got to be a very strong push going lower, mark up that trend line, find your channel, and now you've got that new channel. And of course, we'll dig deeper into find some bigger targets for you guys tomorrow morning, right, in the trade room. So again, as we go lower here, 1, 2, 3 breakout. 1, strong move down. 2, pull back to the moving average, right? 3, breakdown in. Again, don't try to sell that first breakout because most breakouts are going to fail. Now, how do we buy this market now? Right? What's a buy setup look like here for tomorrow? Well, first of all, if we do keep going higher, there are actually 2 buy patterns I'm watching for here tomorrow. One would be the most aggressive one, which is called a 2-try breakout. It starts off with a very strong move higher. That strong move higher, you want to see profit taking 1, sellers come in 2. Okay, the key here is this requires a very distinct breakout move. Okay, I always tell my clients, you're going to know it when you see it because it'll make you lean on your keyboard. Okay, I always can tell people, listen, how do you know you've got a strong enough breakout? You're going to go, whoa, that was a real strong breakout, right? Or if you're anything like me, you're going to put your elbows on your desk and lean into your desk. It's that much of a punch. Okay, and you probably know what I'm talking about. Right? At some point each day, you see these breakaways, you go, holy Christmas, that's a big breakout. That's what you need to see, right? It needs to instill the FOMO, right? It's got to give you that FOMO. That's why we call this the FOMO breakout, right? So what it is it's a strong enough move going higher. Now, guys, you can't just blindly buy that because I'm telling you, sometimes it goes straight up and goes straight back down again. If a market can go straight up, it can go straight back down too. Make no mistake, especially gold. If a market can go straight, it can go right back up again. Okay, so don't trust that breakout. However, what that will do though is that will get the juices flowing. Now, the first pullback is usually profit taking for the bulls. The second pullback is the one you want. Now we've got the 1, we've got the 2, and now we know exactly where those stops are. Now we know where pain comes in, and now we're buying right into those stops. Again, it's called a 2-try breakout pattern, or my nickname for it is the FOMO breakout. And again, we call it the FOMO breakout. Why? Because it leads to FOMO, right? The fear of missing out, everybody involved. So that's the most aggressive one. The second one is the more conservative. This one does not require as much of a breakout, right? It's a up 1, 2, and 3. The 1, 2, 3 breakout running higher, right? That one doesn't require as much oomph. Okay, just want to make sure you see some good separation come off that moving average. Mark up that high. Mark the trend line off the highs. Find your channel. Find your hidden channel. Now we know where our sweet spot is, and we're buying that pullback from there. All right, guys? So that's the buy, 2 buy patterns as we go higher here. Now, how do we buy off the low? Very carefully, right? It really has a lot to do with how the market pulls back here. So, for example, if we go straight line down right now, that's going to be very, very convincing for the bears. So if we go straight through this range and straight down, I'm going to look for the crown reversal. Bears try once, bears try twice, trap low, and buying back up. Okay, make sure you see this, right? It's higher highs, 1 and 2, okay, and then trap low for the signal. That is if we get that strong run lower. However, if we just kind of hang out inside that range, right? Hang out inside that range, then we make the move lower. Now I should be able to rely on a standard failure pattern to buy back up. Just because the overall, right, the overall market is sideways. So if we're sitting here going sideways for a while tomorrow, then we make the run going lower, right? Then the bears try to break out. Let those breakout pullback rookies, let them try to buy that or sell that breakout pullback, and we'll buy right into those stop losses. All right, guys? So again, a lot of it has to do with what momentum we get. Momentum is such an important part of this. And no, I'm not talking about MACD and stochastics and RSI. Those momentum tools are going to rob you blind. They'll give you too many false signals. The bottom line is by using an oscillator, a MACD or an RSI or a stochastic, most of the time you're going to be in overbought, oversold territory, and it's very difficult to use that information to be accurate with your entries and exits. Okay, guys, got the gold ready to go there. Now we're ready to go on gold, wrapping up here right on that euro. The euro is definitely the one that I'm most concerned with tomorrow because, again, it's the ECB announcement. So what I'll do is we'll talk about some setups here overnight, but unless we're seeing some good pep, unless we're seeing some good personality to this, it's really very difficult for me to get excited about the euro until we get through that ECB announcement tomorrow. And again, it's really going to be all about staying patient long enough to get a decent setup here as we go. All right, so what do we know about the euro? The euro, just like the E-minis, they are watching for rollover. Usually the euro will roll over a little bit after the E-minis. I think they're waiting to the 13th, so Friday is what they're saying here right now for that rollover on the euro. So just be aware of that, right? Euro rollover, probably not tomorrow, probably not on Friday, maybe on Monday. We'll see what happens, obviously, once that 12.19 contract has more volume on that euro. We've got that range, right, from yesterday. We saw a strong move down. Now, I wouldn't call this a 1, 2, 3 reversal because you'll notice it came above the moving average and ran. But it's very, very convincing. It's very convincing. That pop is really, really very convincing. I don't think the buyers have control yet. That's why I have it labeled as a bear momentum, but a strong bull move. So in all reality, the bears have it. But if these bulls can hold, we should go right back up into that range, right, that we started from early this morning, right? That big spook going lower here. Now, knowing that we are bearish overall and knowing that we want to be a buyer on this because of that jump, right? What's the best way to sell this market, first of all, right? How can I sell this market? Selling this market, in my opinion, right now, you've really got to wait for some proof that these bears want it. I would normally say you could sell right into a buyer failure right here, but I really don't like that trade right now because you got a couple things happening. One is that strong break up. Okay. 2 is that rising support trend line off that low. I just think this is a trap waiting to happen right now. Just personally. So I don't like that sell right now. If you're an aggressive buyer right now, that would be an aggressive buy setup. That's definitely something I'm looking for here. What I'd rather get to be a seller on this is to get some confirmation and sink back down into this range. And I know it's not what you want to hear. But the reality is, with such a strong bounce off of that moving average, we could easily find ourselves back up into that range tomorrow. What I want to see is, us back, right? Give me a nice strong run lower. Get me now up above the moving average. Look for that failure, right? And we'll sell it back down from there. That's going to be the plan here for those sells. I want to see a little bit more confirmation, right? Get that move going lower. And again, whenever you've got this much momentum, again, this is not too much of a trending day right now or a trending environment. It's more of a range with a shot lower into that strong, right, bull spike going higher there. I want to see that run lower. I want to see us get back above that moving average, which will probably happen, right? And to sell off that failure as we go lower. As far as being a buyer here tomorrow, the buy side is really where I'm looking here in the short term. Again, we may not get the setup because we got the ECB announcement. What I'm doing is I'm drawing a trend line off those highs, lining it up there off of those lows. You'll notice all of this really comes together nicely there for an area of support. This is the biggest reason why I don't like the sell side here, at least not in this example, because we do have that big bounce off of that low. What I'd like to do now is get underneath that moving average, see some sellers take the bait off the moving average, and then you guessed it, failure right into pullback and then rally back higher here. So failure into pullback. Now, like I mentioned earlier, if you want to be real aggressive with it, you definitely can. There certainly is that swing low right there. So if you want to be uber aggressive on it and just buy that trap low, it is a trap. It is the biggest problem with buying that pattern without confirmation of the failure is you're setting yourself up for those sellers coming in and running you over. That's the problem. It's not a bull market. It's a bull bounce. It's very convincing, but it's not quite there yet, right? And that's the key. Momentum is still very much in the hands of those bears, which is why, in my opinion, it's a little bit better of an idea to wait for those sellers to try to sell off it. We don't need much. Just show me some bears are trying, and then once they fail, I can buy into that failure and then hopefully get that pullback thereafter. We may not get that pullback, though, because this market may just run right? Because when a bear market like that reverses, it goes fast. Now, speaking of going fast, right? Could we trade it as it goes higher? Absolutely, right? 1-2 breakout. Okay, strong move up. Remember that? Whoa, big breakout, right? Strong move up. 1, 2, buying that second try. First try is profit taking. Second try are sellers. Once we see 2 tries, yep, then we know we get them right where we need them. Okay, that's one of them. Or it's a 1, 2, 3 break higher, mark the high, mark the low, buying the pullback off the low of that hidden channel. So as you can see, everything we talked about so far will apply those same tools, those same basic patterns on the euro, right? And that's exactly why our trade room is such a big advantage for all of our clients, because every morning we get together, we update our charts, we put the whole entire plan together, and we use whichever patterns in the right locations. We use our rules, and we do it correctly every morning at the opening bell. So careful here on the sell side. You know the bias that I'm looking for here right now on the euro. Tomorrow, again, careful. Be careful, careful, careful on that euro and the gold. Ahead of that ECB announcement. S&P and Nasdaq, watch those 3 specific chart patterns. And of course, oil, that beautiful, right? That beautiful spike and range pattern. Guys and gals, don't forget though, tomorrow morning, 8 o'clock Eastern time, right back in our trade room. We got a plan put together tonight. Tomorrow morning, all we're going to do now is open the trade room up 8 o'clock Eastern time, and I'll see you guys there in the trade room tomorrow morning. If you want to get registered as a brand new client to join me tomorrow morning at the opening bell, grab the advanced class here. It's right below this video here on the website. If you're on the blog, I'll put a big blue button below us on the blog. If you're on the YouTube channel, all the links are in the description of that YouTube video. So check the description, scroll down the blog, find that advanced course button, get registered for the trade room tomorrow morning. Get there early. We'll go over all of our patterns, go over all the rules, and get ready to rock and roll tomorrow morning bright and early. If you're not ready yet to be a member, that's okay. Our free trial is jam-packed with great value. That free trial includes your free trading class, a free pass to our trade room, and hundreds of hours of examples of how we use these setups on our favorite futures markets. So grab the free trial, register for tomorrow morning's trade room as an advanced member, and if you have any questions, call me, email, Skype, live support. Drop me some comments in the comment section below. No matter what, though, have a great day tomorrow. Come back and see us tomorrow night on the nightly newsletter tomorrow night. If we don't see you guys tomorrow morning, we'll see you guys same time, same place tomorrow night on the next edition of our nightly newsletter. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.